فتح presentation أول صفحة. كبري. السلام عليكم. Is our voices clear?
Alaikum salam. Yes, sir, it is.
Assalamu alaikum all. It is our pleasure to welcome you all at Oman Chlorine Investor Sessions for year-end 2024. And before we started, I would like to introduce the team. My name is Saeed Habsi. I am the CEO of Oman Chlorine. Here with me, Mr. Bala Krishna is the Group CFO. Then we have with us our Group HR and the Relation Manager, Mr. Majid Salhi. So I'll take you through the presentations. So this is the agenda of today. But from page 12 onward, it's the financial topics. The five slides is an overview about the companies and also the subsidiaries. So I'll take you through Oman Chlorine. So Oman Chlorine established in '97 as first Omani manufacturer of chloralkali with capacity of 100,000 metric ton of all the major products. In 2007 and 2008, we awarded His Majesty Cup for the first best 5 factories in Oman. In 2021, we did an expansion, so we increased our capacity to 75 metric ton. And also, we built a new calcium chloride plant in order for us to downstream for the access hydrochloric acid into a calcium chloride. We have very good HSE track record, and also we are ISO certified. We're producing and supply quality chemical that goes into oil and gas, such as hydrochloric acid and calcium chloride. And also we're producing other chemical that goes to different petrochemical as a raw material, such as sodium hydroxide or the caustic soda. This is our major shareholder list based on Muscat Stock Exchange. So we have Al Anwar investment. They holding 22%. Then we have Bank Muscat 11. We have Social Protection Fund 9.5. Then we have Oman International Petroleum and Energy Service 9.1. Then we have Al Ikhtiyar Trading and Contracting 5%. What we produce two main products, which is hydrochloric acid and caustic soda. Then from those two products, we are downstream or we convert the product into a solid product. For hydrochloric acid, we downstream it to calcium chloride, as you can see, and our capacity is around 35 metric ton. Then for the caustic soda, when we convert it to solid, we can produce up to 7,200. But as we speak, we are in process of expanding the solid section for caustic soda flakes in order for us to have the capabilities of converting all the liquid into solid for the export. Product use, as I mentioned, hydrochloric acid, it goes into oil and gas. The main application is enhancing oil recovery by acid stimulations. Calcium chloride goes into drilling operation as a drilling salt. Sodium hypochlorite goes as a water treatment. Caustic soda are used in more than half of all the chemicals application to create hundreds of secondary components that turn into different products such as plastics, detergent, alumina, and different products. In 2013, Oman Chlorine decided to expand, so we built two factories. We built one plant in UAE under the name of Union Chlorine. We own today around 72%. Again, we produce exactly what Oman Chlorine produce. So we produce hydrochloric acid, calcium chloride, sodium hypochlorite. Then this is the ownership structure. Today we own almost 72%. And we have two minority. One of them owns 16.7 and the other one is owned 11.3. The other entities or the other subsidiaries is established in, again, at the same time with Union Chlorine based in Qatar. It's producing exactly the same what we produce in Oman and UAE. The only difference between UAE and Qatar is we have a JV to downstream the hydrochloric acid into calcium chloride because there's another manufacturer in Qatar. And that JV we own 35%, which is Gulf Chlorine own 35%, and the company in Qatar they own 65%. Again, we are managing the company in Qatar. The ownership of Gulf Chlorine, we own 51%, and Al Marqab Capital, they own 49%. And the ownership of the JV that catering for downstream the hydrochloric acid and convert it into calcium chloride, Gulf Chlorine, they own 35%, and KLJQ Qatar, they own 65%. For the financial, I will leave the floor to our group CFO, Mr. Bala.
Hello, good morning. I'll take you to the financials now. This year, the company's net profit was around 1.4 million riyals as against 1.8 million riyals last year. The primary reason for the decline in the net profit is due to interest from subsidiary which we received last year, which is not anymore there in this year. That's what has happened in the parent company level. The cash dividend which has been approved by the board is around 17.5%, which is still to be approved by the AGM. And the share price as it stands in March beginning is around 380 paisa per share. The next slide is the historical movement of the revenue, EBITDA, and profit for Oman Chlorine standalone. This year's revenue stands at 12.5 million riyals as against 13.2 last year. The primary reason why there is a decline in revenue is because we didn't trade much of calcium chloride. While the profit is around 1.4, as I explained to you earlier, primarily due to interest not coming from the subsidiary which has been converted as shares in Union Chlorine. The gross margin is around 43.4% increase as compared to last year. We have done more, we have used more of our acid to produce calcium chloride this year. As against last year, we converted a lot of hydrochloric acid which we bought and converted. That's one. Second is there is also a decline in salt prices, which we were able to successfully negotiate it down. And we saved around $5.6 per ton. That also resulted in the gross margin percentage going up. The net profit is down because of the interest on subsidy not being received this year, primarily. The group turnover stands at 34.4 million this year as against 32.1 million last year. The profit is almost similar in the group level. The main reason for the group's increase in revenue is Union Chlorine, which is in Abu Dhabi. They increased the revenue by 2.4 million riyals. Primarily, they traded a lot of calcium chloride for delivery to Saudi and UAE. And then the Gulf Chlorine increased the revenue by 0.4. And Oman Chlorine, there is a slight decrease because of 0.65. The profits approximately remain the same. The main reason why the gross margin is almost similar to last year is similar because of more trading in nature in Union Chlorine as against last year, which was more production in Union Chlorine. The parent company's revenue fell by 4.89, while the profit declined by 21%, primarily due to interest, which I explained earlier. The product volumes were similar to last year in Oman Chlorine. Only calcium chloride we didn't sell like last year. That's because last year we used a lot of hydrochloric acid from outside to convert and sell. This year we sold less amount of calcium chloride. The combined capacity was better this year, slightly lower in the existing plant, and the plant, brownfield plant is around 105. At the group level, the revenues increased by 7%. Primarily, increase in revenue is from Abu Dhabi, and the EBITDA has slightly decreased due to more trading activities in Abu Dhabi and lower prices. Both Abu Dhabi and Qatar posted profits this year in 2024. But UAE's profits are slightly lower than last year. We continue to monitor our prices along with how the oil price is fluctuating. We are optimistic that there'll be a continuous demand for our product, and realization also will be good in this year. We expect that the selling price will remain stable, and so we can generate similar returns. That's what we expect. There's a disclaimer. And that's the end of the presentation.
So we'll open the floor for Q&A. So please introduce yourself before you ask the questions.
Good afternoon, Mr. Hapsi and Mr. Bala. This is Abbas Muslimi from Vision Capital. Thank you for the call and the presentation. You know, right off the bat, I wanted to check with you regarding the competitive landscape in Oman, because I was reading about Al Ghait Chemical Industries plant going live sometime last year. Can you talk about competition from these guys? There's a big plant that's come up next to you, and then what do you see the forecast for the Omani markets? That's my first question.
Yeah, I'll just touch base about them. So they started in November 2024 with the capacity of 70 metric ton. They're producing exactly what we produce. So we'll see pressure on prices for in Oman market. They are based in Sur. They're producing hydrochloric acid. They're producing caustic soda. They can convert caustic into caustic soda flakes, and I believe they are in process of also building a calcium chloride unit in order for them to downstream the excess hydrochloric acid into a calcium chloride.
Okay, and obviously in a market such as Oman, like you said, you expect competition to increase, and then in your presentation you mentioned that you want to convert the liquid products into solid products for export market. Is it linked to them? Is this expansion linked to them coming up in a market and market becoming more competitive, or was this always a strategy?
No. Let me put you on this. For the caustic soda, caustic soda flakes, it's always good that you have flexibility to convert it to solid for the export reason. I'll give an example. For 1 metric ton of caustic soda lye, or 1 metric ton of caustic soda flakes, you need 2 metric ton of caustic soda lye. It's always easier for you to export solid than liquid. That's reason one. Reason two, the demand of caustic globally is always there. The only difference is on the index, because index prices keeping fluctuating. Sometimes it's good that you sell solid outside Oman when the price is on the higher side.
Right. Okay.
I'll give you an example. In 2022, the price of caustic soda flakes, it reached around 1,000 metric ton. So if you assume that the cost of lye is 500 metric ton, $500 per metric ton, in Oman, the price was below $300. So it was always good that if you have that flexibilities, you choose where to sell in order to realize a better margin.
Sure. Okay.
Okay. On calcium chloride, it always good that you have a calcium chloride because it's an insurance policy, we call it, in order for you to run the plant at maximum capacity. Because
Right.
as you know that hydrochloric acid demand is in Oman is enough only for one plant. There's two players. We start seeing pressure on hydrochloric acid. If you have a calcium chloride, you can convert it to calcium. If you have a calcium chloride unit, you can convert your excess hydrochloric acid into calcium and maintain 100% utilization of the main plant. And you realize
Absolutely.
a better margin on the flakes, on the caustic.
Right. The reason I was focusing on the competition is because when I look at the group and parent company numbers, the parent company numbers is almost 90% of the group profits that belong to shareholders, right? So obviously the parent company is doing much better than the group companies for the last few years and even this year. So now with this competition coming in right next door in Oman, I was just wondering what is the outlook for the parent company, especially taking into account that oil prices that have averaged above $80 in 2003 and 2004 are now in the sub $70 range or close to $70 range. So then there are a couple of issues now, right? Because some of these product prices, at least I remember our last conversation with you, I've been talking to you for a few years now. There's a direct linkage to oil prices, activity. And second thing is, of course, there's competition as well, So I just wanted to get your views on this topic, given two issues. One is, of course, the competition that you spoke about. And the second issue is, of course, oil prices coming down compared to what they were in 2003, 2024. This is 23 and 24. This is the second question that I had for you, sir.
Okay. So I'll answer it on a different way. So basically,
Yes.
the main issues in the subsidiaries was both companies are doing very good. If you go and check the financial, you will see that we paid abnormal interest rate because of the LIBOR, because of the interest rate went like out of control for the last 2 years. So if you take particular Union Chlorine in 2022 and 2023 and 2024, we pay almost 3 million riyal as an interest. And still the company did well. So that's the main problem in Union Chlorine is mainly because of the debt equity structure and also because of the interest rate. However, we are working on something to solve those problems. In Qatar, the company managed to get revised tariff. As you are aware that chlor-alkali business 70% is power. So in Qatar, the tariff went back to the normal, which around if you take it in Oman, it's around 12 beza, and that itself is it's saving of half a million riyal only on power. So we're expecting that Q1 both company will do very well. Because now the interest rates start going down, and Gulf Chlorine starting getting they run the plant at 100 capacity, and also the tariff went down to the normal before 2017, which is half what we paid in Oman and what we paid in UAE.
And the parent is expected to continue its performance even though oil prices have come down and maybe product price. Like basically, what I'm asking is, what is the outlook on product prices then? On calcium chloride, on hydrochloric acid, on sodium, caustic soda, and sodium hypochlorite.
Okay, if you talk about caustic soda, it's as I highlighted before, it has a global index. So in beginning of 2024, the caustic soda price was around $380 average price X. By end of 2024, the X price, it was range between $500 to $550 X.
Okay.
And if you look, I mean, now we are end of almost beginning of March. So the price still at that range. So if you compare Q1 to Q1, the price was 380. I'm talking about the caustic soda flakes. And Q1 till now, the average selling price is above $500. So it's around $120 extra.
Excellent. Okay, that's good news.
For the flakes.
Okay.
However, there's a pressure on calcium chloride, and there's also pressure on hydrochloric acid. In
Right.
Oman, because of competition.
Right.
UAE, there is no, because the competition are there. There's 3 plants. In Qatar, they're doing fine. I think you will see the Q1 result for subsidiaries.
And Oman and the parent should continue its solid performance, right? Like subsidies.
There is a pressure on the margins because of the competition. Right. We expect that on the upcoming Qs that there'll be decline on our margins because of the newcomer.
Yes, of course. There's a guy who's trying to take market share.
Yes.
Is there a way?
That's normal. But again, as I said, because I just checked the numbers of January, February. But the subsidiaries, one of the subsidiaries, they did very well. They did like outstanding. Right. Because of that. So their number, when we consolidate them, they will offset the decline, hopefully. Okay. And I had a question on the financial side, this interest part. Of course, you have spoken about it in the past as well. I remember we had a long chat about this last year. And you said there were initiatives you were taking to sort of fix this. But at the same time, okay, US interest rates came down twice, but then not as much as we were expecting at that, at probably the same time last year. So now what is your effective cost of borrowing and how can we address this? Because clearly this is a problem, not so much in Oman, but outside Oman. So how can we address this interest rate issue that we are still paying above market rates, right? Or at least above market rates that we are seeing in Oman. I think your effective cost of borrowing is what, 8-9% right now for the entire group? Yes. So basically, the only place that we see a huge interest rate is UAE. Right. In Oman, we pay low interest rate compared to them, and also in Qatar, we pay low interest rates. However, we are working hardly with our bankers to see how we can manage the loan there and getting a better deal with them, because they are our partner also, because of the debt equity. They own more than, technically they fund us more than 70% of the debt. So we are expecting that by end of Q2 this issue will be solved, inshallah.
If you can share, how much are you paying on the UAE loan? And what's the loan outstanding there?
Just to give you if you take the average interest rate in 2024, it's around 8.5. Today, the interest rate is 7.5, 7.75. 7.5. So it reduced by 1%.
Excellent. Okay.
Still, the 1% is not enough. It's really on the higher side, because Oman, it's around 5.5. So
and yes, correct. This is the rate in the market, 5.5%.
Yes. So this is the rate. So as I said, we're working closely with the bank in UAE, and we had a meeting with them last week, and hopefully this issue will be solved in the upcoming months.
Inshallah. What's the rate in Qatar approximately?
Around the same like Oman, around 6.
Okay, and I had another question on cash flows. When I see your balance sheet, the consolidated statements, and I see the current borrowings of 7.5 million riyal, is this something that you expected to pay in the next year? Because I was thinking, how are you going to get the cash to pay this? Because your current borrowing is showing 7.5 million Omani riyal. So how are you going to pay this?
Yeah, see, this current portion of term loan came up because of the higher interest rate in the past 2-3 years. If we didn't have this higher interest rate, then we would not be having this issue. But we are working with the banks to rework the current portion, to refinance the current portion, restructure the current term loan. That is particularly in UAE. We don't have issue
Okay.
in Qatar. We don't have issue in
Okay.
Qatar. We have issue in Oman. UAE also
Right.
is done shortly. Yeah.
So hopefully, so basically what you're saying is Oman's loans, term loans, and Qatar's term loans are going to continue as per the current contract with the banks. Is that correct?
That's correct.
Okay. Yeah, because when even if I look at your cash flow statement and I know your P&L has a big depreciation charge, which is a non-cash expense, and I add it back, there was no way that I see you generating this kind of cash to pay this and service the interest, So that was my question. So you are saying that you will have to refinance because the other option is going ahead and raising equity. But that option is not on the table, right? You're not planning to come back to shareholders and do an equity injection.
Mr. Abbas, I know this issue has been, we have identified this issue almost a year back. So it's not new.
Right.
We are taking appropriate strategies to mitigate this. How to manage this? We already taken action. Only thing is, this will come during the course of this year. This will get sorted out.
Yeah, for me, I remember this. That's why I told Mr. Hafsi that, a lot of the issues we're speaking about today on the debt side is something we have spoken about in the past. So when I see this number, it came as a surprise to me. But, you've given me reason to be hopeful. So I wish you and the UAE team good luck. And my last question is on the CapEx, Mr. Hapsi mentioned about the expansion. Now, what is your maintenance capex? Once you've sort of met this expansion, what sort of maintenance capex is something that the parent and the group needs to continue its operations based on the current capacity?
The maintenance capex will be on a cyclical basis. We don't have major maintenance capex. Every 4 to 5 years only we'll have a major maintenance capex. Otherwise, it will be hovering around 2-3% max specs of the total assets.
2-3% of the
Yes.
total assets. Okay, fine. And after this small expansion that you spoke about in the solid products in Oman, there are no other major expansions that you're thinking about as we speak, right?
No.
Okay. Okay, thank you. I'm going to wait my turn in case I have more questions, but I'm sure my colleagues would like to ask you questions. Thank you. As always, a pleasure talking to you both.
Thank you. Yes, Mr. Matthew.
Good afternoon, gentlemen. Thank you for the presentation. Now, just one question on the upcoming competition in the domestic market. I'm seeing there are new plants coming up, and one in Sur, and the other one, there is another one which was announced in Dhofar. So, your thoughts on how do you see the upcoming competition coming up, and will there be a price war on this? Are you expecting a major price war on this one?
I think, thank you, Mr. Matthew. The far one, I don't think that plant is materialized. They don't have anything on the ground. So one, as I answered Mr. Abbas, they already started in Q4 last year, and we start seeing price reduction on the market.
Okay. And are there any new plants coming up in Qatar and UAE?
Qatar and UAE similar plant? No.
Okay. That's it. Yeah.
Hi, am I audible?
Yes, Mr. Sharu.
Yes. Thank you for the opportunity. Okay, I wanted to ask a couple of questions regarding the capacity utilization. So in one of the slides that you shared, you mentioned that currently your hydrochloric acid is operating at a 32% capacity utilization, if I'm not wrong. And sodium hypochlorite is at 15% now. What are the reasons, if I'm understanding it correctly? Is there any bottleneck that is preventing you to go over this current capacity, or is it on the demand side?
Mr. Shaw, you are representing which company? So can you introduce yourself, please?
Yeah, I'm from Vision Capitals.
Which one?
Vision Capital.
Okay. So your question is on the capacity of this.
But I'll answer this. I think on the slide, you say hydrochloric acid is 32% concentration. It's not capacity. That is the product type. And 49% is the concentration of the caustic soda. It's not the capacity. All the plant that we operate today, last year it's above 99. It's almost 100% capacity utilization in Oman and UAE and Qatar.
And that's true for all of the products, sir?
Yes. So basically, when you run the plant at maximum capacity, or the product is you'll produce at the nameplate.
Perfect.
It's not joint
Thank you.
product, Mr. Shado.
Okay, thank you.
If you'll allow me a couple of questions. So Mr. Hapsi, now that if you have to take a holistic view, right, take a step back, and there is this opportunity to reduce interest burden in UAE, and inshallah that should be resolved soon. You spoke about prices actually being better on average versus last year, right? I mean, except maybe hydrochloric acid. So
Yes.
what is your outlook for the year for 2025? If you have to take a step back and look at your business, and what you're telling me is you expect to continue to work at 100% capacity utilization. Locally, there might be a challenge with the competitor coming in. Obviously, he wants to take a market share away from you. Qatar, you're going to benefit from the lower power costs. So if I put everything together, right, all the initiatives you're making as a company, what sort of prognosis do you have for the company in 25 and 26, sir?
Abbas, you're always asking this question every year. It's
No,
very
because I love listening to you. That's why.
Yeah. It's very difficult to give a proper projections on the oil price. And also it's very difficult to give a projections about what will be the selling price of caustic soda globally. With all these things happening between Russia, US and China, we cannot project. I just give an example. In 1 year, if you take 2024, Q1, the global market was buying at price of $380. Then end of the same year, he was selling above 500, the maximum price, $550. So the fluctuating on price is really, you cannot predict that. Due to a lot of reasons, political reason, logistics, energy costs. So it's very difficult to project what will be the selling price till end of the year. But what we can tell you short term, the price of the index will be above 500 till end of Q2. But after Q2, I cannot give you price. That's why we don't have a long payment for the export market because of price fluctuations.
Okay. And when it comes to the parent, which you said will be under pressure, the performance because of the competition, is it easy to substitute the local market with the export markets, even if you take the extra freight into account, or it's not that easy?
You still run the plant at 100% capacity. You'll still sell, but you'll sell at lower margin.
But you want to sell to local, even if the realization is lower in the local market. Is it because it's a long-term strategy to protect the market?
Is not necessary, because if the price of, for example, the price of caustic outside, it's better, then it's better for you to sell outside.
Okay, and so you don't have any long-term contract that have locked you into the local markets. You're quite flexible.
No. We have long-term contracts, yes, and there's some contracts that expire, and we start getting a new contract. We start losing contracts also, and that's normal because again, you have a plant that producing exactly the same thing. And by the way, that plant in Sur, they are also our neighbor in UAE, so we know them
Right.
better. So their plant in UAE started with our plant in UAE in 2017, and it was less than 5 kilometers between the two plants.
Right.
Yeah.
Okay.
So for newcomer, of course, he will approach the client trying to penetrate the market by offering cheap price in order to capture the market, share, and that's what we're seeing. But for us, we don't want to go into the a price war. We try to find a different strategy in opening new market.
Got it.
I think this will be normal.
And when will your expansion be live? The expansion that you spoke about?
For the flakes, it will be end of July.
Okay, and you've already, and how much more capex are you expected to make for that part?
It's around 3 million riyal.
Okay,
Yes.
It's around 2.3 or something million real, but we have 50% we have paid, the balance is going on.
okay, that's the question. And is that it's again funded from mix of debt and equity locally?
No, we got at very good interest rate, around 3%.
Really?
That amount, yes, we use Oman Development Bank.
Half we got.
Excellent. Okay, this is a good news. Okay, so the funding is secured for the entire 3 million.
Yes,
That's
yes,
good news.
yes. And part of that funding, we got fund from Oman Development Bank at very good interest rate.
Okay, I think that's it from me. Thank you very much for all your answers, and I look forward to the results coming in. Maybe we'll interact in half-year times. I think maybe
Inshallah.
after the second quarter. Thank you.
Thank you, Abbas.
Thank you.
Is there anyone would like to ask any questions before we end of the sessions? Gentlemen, thank you very much for attending our session, and hope that we'll see you next time. Thank you very much.
Thank you.